Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Friday, June 2nd, 2023. Before I click through all the charts, please click like, please click subscribe, please share with friends and colleagues, and please check out wickedstocks.com, where we offer a full suite of daily and weekly analytical videos just like this one. Daily analysis in the triple Q and the SPY, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT. We also put out two individual stock picks every week. On Thursday, we put out an NVIDIA analysis, about a 10-minute video that shows projections both upside and downside in the event of penetrating key long-term levels. You should check that out. We offer a 5-day free trial, so you could go in, check out NVIDIA, check out anything for several days, and if you don't like it, you can cancel your subscription at no cost. So there's that. All of that for $47 a month. Check out wickedstocks.com. So let's jump to the charts. Big test today, having closed last week above that 190.48 formation. We have 208.93 that we did test today. We pushed through it by almost a full point, backed off into the close, did not close above it. If we settle today above 208.93, it does need to be by a 1% margin. Closing at 209.10, for instance, is just not good enough. It's too close to call. But if we settle at that 1% mark or higher, in other words, 211.02 or higher, we enter a meaningful buy signal that indicates, I think, at least two things. One is good low for the year, no more aggressive follow-through selling back to that January low, at least anytime soon. And inversely, anticipating 265.05, this rising channel top as a 2 to 3 month target, perhaps 3 to 5 months, depends on volatility. This is pulling away at a pretty good pace. So if we close today at 211.02 or higher, if you've been scouting out, those 175, 165, 155 out of the money puts that don't expire for, at least a week or two or a month or two, I would suggest covering them and reversing, and that would mean really buying 270, 280, 300, take your pick out of the money calls. If you're going to go 270, I would have at least 3 months into it. If you're going with the 300, I would have at least 6 months into that. But those are the upper objectives. This formation, as we move into the fourth quarter, actually pushes into the low 300 area, and it does become our next, I'm going to call it near-term objective. I do think closing above this one-year descending channel top by a 1% margin of 211.02 or higher today does carry with it even higher price points beyond this channel top. This is just the next big picture objective. So there is that. Let's take a look at the day itself. I'm going to show you, let's see here, 192.28. 192.28 is that former channel top that we did close above on the daily chart on Tuesday. And once again, on the weekly chart, we closed above it at the end of last week. It's at 190.48. It's about a 2-point range now, a $1.80, 190.48 to 192.28. I don't expect to see it, but just know that holding below 208.93 will keep this area in reach, this 192.28 in reach by the end of next week or sooner. Possibly today if things get ugly. Things do get ugly, in my opinion, if we break this channel bottom at 200.44. 200.44, 200.44 is a decent day trade level. So if we ease off of 208.93, and we might, this is a big area, we can fall to 200.44, where we could actually bottom out possibly on the day itself, and from there rally back to 208.93. I wanted to call this a session containment level, but put it in proper context, we're testing a one-year channel top right now at 208.93. This market is able to rotate south in a significant way back into the 150s over the next month or two. So on the way down, I would call holding below 208.93, 192.28, a 3 to 5 day target, potentially an intraday objective if we break or open today below 200.44. I'm just going to keep going through these charts. 192.28 also correlates with the new rising 1/3 speed line. I don't expect to see this area today, but if we do test it, this is a great 3 to 5 day swing trade. Buying 192.28, selling 208.93. If you went short at 208.93, 3 to 5 day swing traders buy back at 192.28. If we were to close below 192.28, that is a long shot today. But if so, We've got a good high into later June. I expect the next week, two at the most, to continue south to 172.35. So there's also something to be said here with this chart. Because of the significance of 208.93 that I've already shown, that 1 year descending channel top, you could consider buying 172, 174 out of the money puts that don't expire for at least 2 weeks. You may go a month out on that. Or you could also consider buying this channel top here, and I don't even show it, coming across these highs against this intermediate low, is in the upper 150s right now and descending. So there is a case to be made if you're more of a big picture trader, if you're more looking at the 1 to 2 month, I call that near term investing, or longer term speculation. If we hold below 208.93, you may reach for the 160s or the 150 out of the money puts that don't expire for at least a couple of months. That is the big picture downside right now, and it's proper to sort of reveal it to you because we are in the midst of testing a long-term channel top on the weekly chart at 208.93. So all of those downsides need to be expressed right now. And once again, breaking 200.44, 192.28, attainable today, where we can bottom out into next week and rally back to 208.93. We could fill this area out all the way through next week. Once again, closing below 192.28, 172.35 expected within a week, 2 at the very most, where we can certainly bottom out on a weekly basis and then round up again as we move into later June. Closing below 172.35, then we're looking for the mid 150s within a week or two. But I will say, last thing I'll say about the downside is holding below 208.93 will keep the mid 150s in reach by the end of July or sooner. Keep that in mind for you big picture traders. Now to the upside. Pushing or opening above 208.93, the long-term channel top here, once again, a pushing or opening above 208.93 signals 214.24. That is the high settlement price on the daily chart back in that early February high. 217.65 is the actual high itself. I will say that 221 and a quarter, is it in reach today? I don't have it shown here, but I can tell you what 221 and a quarter is. It is a long-term 3/8 upside Fibonacci. You take that all-time high from, I think that is December of 21, back to the January low. 3/8 back up is 221 and a quarter. We can top out there for the day. And so I will say that if we push through that 208.93 formation today, we could reach, there it is, 221 and a quarter on an intraday basis. This is certainly possible being a Friday and all. This is in reach. I have it as a session containment level only because once again, closing today above 208.93 by that 1% margin of 211.02 or higher, and we see longer-term aggressive gains made as we move into later summer and autumn trade. In other words, August, September, October, this area in reach. So keep that in mind. Big pivot point here right now. We are below it. And so this market can ease back as we move into June, July. If we close above it, aggressive gains into later year. I'm going to leave it at that. I think that is all that needs to be said for Friday's Tesla Report. Please click like, subscribe, share, and check out wickedstocks.com. I'll be back Sunday afternoon with Monday's Tesla. You have a great weekend.